Are you thinking about buying your first home, but you're terrified what it might actually cost you? You might be wondering to yourself, how much money do I really need to save up in order to buy a home? Or what unexpected costs should I really be expecting? What's up, guys? It's James Peterson with the Peterson Real Estate Team, your Sacramento area real estate expert. And in today's video, I'm going to explain in detail the general costs you should really be expecting to pay out of pocket when buying your first home. Buyers in today's real estate market have it pretty good. In fact, it can actually be easier to buy a home than currently rent a home here in the Sacramento metro. There's a lot of misconception when it comes to how much money you'll actually need in order to buy a home. As a first-time home buyer, you may have heard you need 10% down, you need 20% down, but the truth is there's several programs out there such as FHA, there's VA, and even conventional programs where you only need about 3% down. I will say that again, 3%. Now, if you're having a hard time coming up with that much, there are several down payment assistance programs available as well that you might be able to qualify for. And I'm going to go over those with a lender partner actually in an upcoming video. So make sure to subscribe to our page and feel free to reach out to us for details on that. Something to be aware of is that costs can fluctuate a lot from county to county, as well as a starter home up to a luxury home. So right now I'm going to go over with you step by step all the costs that you might expect from an average starter home here in the Sacramento area. So for a round number, we're going to use a purchase price of roughly $300,000. In negotiating the purchase, there's actually ways to adjust the terms in the contract to help lower the cash out of your pocket at closing. And typically only experienced agents really know how to do this pretty well. And it's usually a give and take situation. So for example, if we agree to come up a little bit in the price and negotiations, the seller might agree to lowering the closing costs for you at closing. So, once you have a successful contract and negotiations, you'll go into escrow, and the first check you'll be actually writing is the earnest money deposit. And the deposit is actually made out to the escrow company, and escrow company manages all the money for the transaction. Typical deposit is going to be around $1,000 for something in a $300,000 price range in Sacramento. The deposit is really a credit towards your funds due at the close of escrow. But keep in mind that earnest money could be at risk if you were to fall out of escrow for some unknown reason. And this is where contingencies really come into play. Contingencies protect you from losing that money should you find any issues with the house during inspections or issues with the appraisal value, or if something happens to your ability to obtain financing. So if you find any problems with the house or run into issues with financing during your contingency period, you have the ability to pull out of the transaction without losing that money. So with that being said, your next step in the transaction is your due diligence period, or your time to actually inspect the property for defects. So we recommend that you get a pest, or also known as a termite inspection, a home inspection, and a roof inspection for most homes out there. Some companies will actually have a package that covers all of those, but you want to make sure that you hire a competent company that's going to do a good job for you. And the inspection costs can range a lot, from $100 to $200 for a pest or a termite inspection in this area, and $300 to $600 or even more for a home inspection based on the size of your home, the location, the type of foundation, even if it has a slab or a crawl space underneath. For our example, let's assume that it's a townhome, and townhomes are mostly maintained by homeowners associations or an HOA that you actually pay a monthly due for. Now, HOAs typically cover the roof and exterior structures as far as maintenance is concerned. So you'll have an inspector visually look at it. But if there's any issues, you can ask the HOA for a letter that they're actually going to take care of those repairs. And for townhomes and condos, termite companies, they'll often do a limited inspection for just under $100. And that's just going to look at stuff on the inside of the house or the condo. So more often than not, inspectors are going to find things that actually need repair or upgrading. And at that point, you can reopen negotiations with the seller and ask for either repairs to be done, or you can ask for credits for your closing costs at the close of escrow. So let's assume that, for our example, there's a few electrical issues, maybe some minor plumbing issues that need repair. So a good agent is then going to get an estimate from a plumber and an electrician to get out there and give you estimate for how much it's going to cost to make those repairs. And then you can actually use those estimates as leverage for negotiation for those repairs. So let's assume that's going to cost around $500 for repairs, and we actually got the seller to agree to credit $500 toward the closing costs. So within the first week, your lender's gonna order an appraisal and to make sure that the value is there to secure your mortgage. Traditionally, your lender is gonna have you pay for that fee directly, but today that's not so typical, and it usually gets paid through escrow. So you'll see that as a line item. Inspections are usually the only thing you're going to actually pay outside of escrow. So all of the closing costs, your lender is gonna wanna see paid through escrow. So you'll actually receive a document from your escrow company called the estimated settlement statement that line items all the closing costs and credits. So here's an example of what an estimated settlement statement looks like. So let's discuss what the other costs you should expect when you buy a home. This might look a little confusing, but if you look at the columns at the top, the credit section is where you'll see all the funds going towards the purchase, such as your deposit, the mortgage, and the seller credit. Now the debit column, there's items that actually add to the cost, such as the purchase price, taxes, and fees. And at the bottom of this column, you can actually see what the total cost of the home is, including the closing costs. So the total cost in this example was $305,500. So let's do a little math to show you how much money is actually needed to buy this home. So if we take the down payment of $9,000, which is the difference between the mortgage and the purchase price, and then add up all the other closing costs, it would be around $4,500. So the buyer paid only $13,500 through escrow. Now this doesn't include the $500 or so that you would expect to pay outside of escrow for all the inspections. Now let's break down the closing costs so you can understand what you're paying for and why. Under the financial section, you can see that the purchase price, $300,000 in the debit column, and in the credit column, you can see a deposit, which is the deposit you originally put in to escrow for $1,000. And then the loan product in this example that we used was a 3% down conventional loan. So the mortgage is a credit of $291,000. And moving down to prorations and adjustments, there's an HOA credit of $50, which might seem odd, but down further, you'll see a debit of the entire $350 HOA fee for the month. And the credit is actually prorated because closing is 6 days into the month. So here you'll see the seller credit for the closing cost of $500. And lastly, the county property tax owed for the remainder of the tax year is $352. So the tax year actually runs from July 1st all the way through June 30th. And that's due in 2 payments in December and in February. So most lenders actually like you to pay through an escrow account, which means you're paying the property taxes along with your mortgage payment every month. And then the lender will actually pay the taxes when they're due. And it's a real good idea to have these tax impounds. That way, you don't have this giant lump sum to pay when the tax bill comes. The next section really breaks down all the lender charges. So the first line is prepaid interest of $805. And since the rest of the month is paid and your payment is due at the end of the month as interest accrues, the first mortgage payment that you'll have won't actually be due for almost 2 months. Woohoo! That's a relief, right? The next charge is $525 lender fee called points that get paid to your lender. The appraisal fee of $450, credit report of $45, flood certificate of $8, and a tax service fee of $85, and a condo cert of $247. These are pretty typical fees, but they can fluctuate a lot depending on the lender that you're using. So really keep an eye out on those on this statement. And lastly, the lender credit of $450 is a discount that the lender offered back to help offset these fees. For the next section, impounds. The property taxes are actually prepaid for 5 months into an escrow account for $1,520. The reason for this is really because the first tax payment is due in December and it's paid in arrears, right? So it starts in July 1st. And then the first payment's in December, but then the next payment in February actually pays the remainder of the tax bill up until June 30th. So it really means that the escrow account needs to be padded to cover the entire year's taxes. So in the next section, title and escrow charges, there are fees charged to manage the escrow and pay title insurance to ensure that there's a clean transferable title to you and your lender. Each county is really different on who pays these fees, so check with your agent or title company to make sure about that. Sacramento County, the seller traditionally pays the title and escrow, but it's a negotiable item. In this example, the escrow fee is paid by the seller and the buyer only pays half the title insurance, which is $583. So for signing loan docs, the notary fee is about $100, and then the loan servicing fee is $430. Lastly, the miscellaneous section. Here you see the HOA fees that we talked about, and they're paid for the month of $350. But don't forget, there's another often overlooked but important cost is a 1-year home warranty. Most of the time in our area, we can negotiate that the seller actually pays for it. However, if they won't do it for some reasons, expect the cost to be around $400 to $850, depending on the size of the home, any upgrades you want to do with the warranty, such as coverage on things like appliances, pool, spa equipment, or HVAC systems. I hope this answers a lot of your questions about the cost of buying a home. And if you have any more additional questions, feel free to reach out to us by phone or email. We're always here to help out. And you can reach us at 916-500-4410. And for more great real estate videos, subscribe to our YouTube channel and check out our website at petersonteamre.com. It's the fastest, most accurate real estate search site in the Sacramento region. Again, this is James Peterson from the Peterson Real Estate Team. Have yourself a great day.